world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're joined by Tom Blomfield, CEO and co-founder of Monzo, one of Europe's leading digital banks. For Tom's full backstory, check out Rebank episode 17, when we first connected with him. In today's conversation, we discuss Monzo's recent milestones, including passing the 1 million customer mark, its future plans, and much more. If you're a regular listener, please take 2 minutes to rate and review Rebank on iTunes or your go-to podcast platform. It really helps drive traffic and makes this all worthwhile for us. Thank you very much for joining us today. Please welcome Tom Blomfield. Tom Blomfield, welcome to Rebank.
I'm delighted to be here. Thanks for having me.
Yeah, it's good to connect again. It was, I think, well over a year ago when we first connected, something like episode 17, and we're getting on toward kind of 110, I think, at this point. So a ways back. You guys have made some excellent progress since then. Wouldn't
it feels like a long time ago.
Well, it does, and I'm sure it does. Like, actually, so that I think certainly would have been before you were fully authorized as a bank offering current accounts. I think it was back kind of during the prepaid card times.
We got the provisional authorization and entered mobilization back in August of 2016, I think, and then we exited mobilization in sort of March or very early April in 2017. So yeah, it was certainly before then.
Yeah.
And now we're fast forward 2018. It just like, where have the years gone?
Yeah. So update us quickly. I've hit some massive customer milestones, and you're doing some really really awesome stuff.
Thank you.
Tell us about it.
Yeah. So we just hit 1 million customers, which is awesome. We've moved into the fancy new offices on Finsbury Square, in which we are now sitting. And looking back a little bit, we really only opened up current accounts to the public in sort of December 2017, and we were really in January 2018, and then shut the prepaid down entirely in March, very start of April, I think, April 2018. So that the prepaid has been gone now for 6 months, but that feels like a lifetime ago. Supporting those two programs on different technology providers was one in-house and one sort of outsource was... it was great to simplify the kind of technology estate, if you will. But yeah, 1 million customers is a big, big milestone. We've also recently got contribution margin positive or gross margin positive on our customer base. So back in the prepaid days, we were losing about £65 a customer. Moving to the current account at the start of this year brought our marginal loss to about £35 a customer. And now we're about gross margin neutral. And
how do you calculate that?
Any kind of cost or revenue that scales linearly with customers. So rent on this office, we don't treat as a marginal cost. That doesn't scale with our customer base, but things like customer service cost is included as a marginal cost. We can actually measure the interactions and allocate costs down to a customer level. Things like payment scheme costs or interchange revenue, lending revenue, financial crime cost, KYC, AML, ATM withdrawals, and then ATM fees that we charge to customers to set that off. So all of the stuff that scales with customers, but not things like engineering salaries, for example, that should scale sublinearly. So it's once we get to gross margin positive, further customer growth becomes a solution to our problems, not a cause of our problems. When you're losing money per marginal customer, further growth just digs you deeper and deeper into operational losses, which is where we've been intentionally so for the last 2 or 3 years. But we're now starting to climb back out of that hole, approaching the P word, the profitability. It's not a priority in the short term, but we'll get there in the next year or two.
What's the main driver of that? So apart from moving on to your own systems and away from kind of prepaid providers, what is it that really drives that gross
The biggest single
margin
item
profit?
actually is a little unusual, and it's the way the prepaid system was set up with debit card top-ups. So we implemented a card acquirer so that you could basically take a charge, i.e. enter your card details of your Barclays card or your NatWest card. We'd remove money from that via an acquiring charge and then make it available immediately on your Monzo card, which was really, really slick and instantaneous. Unfortunately, cost us a ton of money. That was probably costing £25 per customer per year, just in account funding fees. We're putting billions a year through that thing. So now, actually, as of today, we've turned off debit card top-ups for all users. So that's a big step towards making Monzo sustainable and keeping the account free for our users, which is really important to us. So that's a big step. And then technology providers is probably the number 2, 3, and 4 on the list of top costs.
That probably encourages people to start to shift their day-to-day banking to Monzo salary receipt, those that don't already do it, right?
Yeah, we actually turned it off. So we tested this pretty rigorously a few months ago. We turned it off for half of new users. So you had a 50-50 chance when you signed up to Monzo for several months. Half of the new users got the kind of debit card top-ups, the other half did not and had to do it the normal way, bank transfer, and we measured everything. And actually it turned out they performed identically, which is very annoying that we've been paying all this money. And actually there was no impact on Net Promoter Score, on engagement, on retention, on overdraft usage, on really referrals, on anything. They performed the same. It was the older users who'd gotten used to it as part of the prepaid program that we had a little more difficulty shifting off, because we sort of taught them to use the product in that way. And so we've had to go to them and really try and explain why it's so important that to keep Monzo sustainable, we reduce the cost so that we can keep providing this great service that they love without having to charge for it.
Yeah.
So it was slightly harder to kind of convince those older users.
Mm-hmm. So the million customer mark, any update on, I don't know, just kind of user behavior or any relevant metrics?
So
I think when you first kind of started rolling out the current account product, it was something, I don't know, demographic. Maybe it was, a slightly younger demographic, maybe slightly male dominated. And then I think at a certain point, it was something like, whatever it was, X%, 40% maybe who are actually receiving salaries into their accounts.
Yeah, so we're about 50-50 on the gender balance. About 50% of our customers are under 30, probably 75% are under 40, and so a quarter are above 40, or 40 and above. In terms of salary usage, salaries is something we think about a lot, but probably not as much as the Financial Times or other banks. I think it's a proxy for what we're trying to achieve. It's not the end goal, because we don't actually care about the deposits as much as a normal bank. What matters most to Monzo is being the primary relationship between a customer and their money, even if the money sits off balance sheet. So depending on what proxy you use, something like 25% of people, we believe, put their salary directly in. Probably 50% of customers deposit at least $500 a month by bank transfer, which is a pretty good proxy for disposable income. But really, with the rise of PSD2 and open banking, I think we could accomplish our mission without ever touching the money, which would be kind of interesting. So we don't really have a good use for the deposits. We put them most in central banks at zero risk and earn base rate. It's not particularly wild. So we have a few £100 million of deposits now just sat at the central bank. So yeah, we're kind of looking at that and thinking about, do we find a better metric? Like, how do we measure being, well, what is the phrase, top of wallet or the primary account? Or one interesting way an investor showed us a few weeks ago, they'd gone and commissioned their own survey and just asked people, who is your primary account? So kind of self-declared primary account, which actually is, I think, is probably the best proxy. And under that measure, about 50% of Monzo customers said, I use Monzo as my main bank, where your main bank is kind of up to you to decide, right? It's sort of kind of a state of mind. It's almost like when you're looking, when you want to buy, you've got to buy anything, you go to Amazon first. Amazon is, you don't bother search on Google, or at least I don't anymore. I just go straight to Amazon, I put the brand name in, I buy the first result. I trust it enough to do that. And kind of that's where we want to get to with Monzo, that I have a problem with my money. The first thing I do is open Monzo, because I know it's the quickest way to solve that problem.
And maybe the last relevant point is, I believe you're in the middle of a fundraise, at least according to mainstream press.
Fake news.
Oh, I doubt that. Yeah, knowing how startup banks work, you're basically always in the middle of a fundraising round.
Yeah, no, we have not closed funding yet. We had not closed it when the press reported it. It was a little premature. Hopefully, we'll have some news before the end of the year. I mean, we always said we'd be fundraising by the end of the year. It's not. We've got plenty of capital to last us through to the middle of 2019. We'll let you know when we have news. Yeah. It's
you guys do a limited amount, I believe, still of lending, which would suggest that your risk-weighted assets are relatively low. So to throw in some banking terminology, which would suggest the capital that you're raising is less to kind of provide the regulatory capital that's required to support the balance sheet and more for growth.
Yeah, that's absolutely right. So we're lending right now probably just over £10 million. We could, and the regulatory capital to back those loans, as a rule of thumb, might be £1 million or £1.5 million. We can finance every single pound of lending we're currently doing out of in shareholder capital without touching depositors' money at all. So we are 100% reserve bank. Which is a sort of novel approach.
Only one, perhaps.
It's just not a big part of our business model. That number is growing over time. It's something we're lending to about 20,000 people, so about £500 a person to about 20,000 people. And our customer base is about 1 million. It's really low levels at the moment, and it's growing steadily over time. But it's not something we're pushing very aggressively. And I think balance sheet lending on the Monzo balance sheet will get us to profitability. And it'll sustain the business through to sort of the long term. But really, the 10 or 15-year vision is to push as much as we can off balance sheet.
So you talked about how effectively the goal is to get customers using Monzo as their primary bank. And
being their primary interface.
Yeah. And what is the advantage kind of to Monzo of that? I mean, in traditional business terms, it's maximize profitability. The simple way to do that would be turn on lending, but that's clearly not the main thrust of the strategy at this point.
Yeah. So the main rationale for wanting to be that primary interface is really because it puts us it gives us a best opportunity to help customers. It ties back to why we started Monzo, which is that I think a lot of banks really are way too focused on financial products and selling financial products like mortgages and loans and savings accounts, and don't really think about the human beings. And we started Monzo because we were all deeply frustrated customers of the big banks, and they seemed to provide a really lacking service. And we wanted to provide a really world-class service that helps people live their lives. So they're just a bunch of annoying admin in your life to do with your money. That might be making sure you're paying the right amount to your student loan, or you're contributing to your employer, your pension contributions, or you're managing your savings and your ISAs effectively, or you're chasing your mate for the 50 quid he owes you for dinner, or you're collecting the right level of cashback or loyalty points from whichever retailer is offering it. All of this stuff requires a ton of admin. And human beings aren't great at admin, actually, but computers are really good at admin. And so Monzo is aiming to be that hub, that control center, that platform that shows you all of your money wherever it sits and does the admin in the background to give you time, peace of mind, and ultimately a few more quid back in your pocket. And so having full visibility of a customer's transaction history actually is really, really valuable in enabling us to get better offers for the customer. But not just stopping there, not just saying you could save money if you did X, but going way further than that. Because we're your bank, we've already done all the KYC and AML checks. We can hopefully act as your really trusted advisor, I think is the right word, subject to regulatory permissions, to go and manage your affairs in your best interests and give you time and money back. So this idea that because we've done all these identity checks, we can act as an identity broker. We can enable you to sign up for a new savings account with 1 or 2 taps without having to go through identity checks again, because you've already done them. So that, I think, is the vision. That's why being the primary interface matters so much to us, and having full visibility of your money and your transaction data. And frankly, why we don't care so much about where the deposits actually sit, because we're not taking credit risk with them. We prefer you went and got a better deal with a different bank, and we get a cut of that. You get the huge majority of the benefit. So the beauty of that model is we only benefit when our customers benefit.
All right, so catch us up on the current state of play in the digital challenger banking space in Europe, and kind of how you see things playing out over the next few years. We kind of started from this point of some regional players, Monzo and a handful of others in the UK, N26 in Germany. I think there were some the move-ins and the simples of the world early on in the US, and people are starting to now scale, offer really transformatively different experiences, I think, which are clearly resonating with customers and which are driving broad segments of the population to adopt. And I absolutely don't expect that to change, if anything, to speed up. I don't know. I mean, how far in kind of the trajectory of digital banking, specifically maybe the kind of digital challengers and their expansions and impact on customer expectations, do you think we are?
So I think the short answer is we're only getting started, and I think it's accelerating. We grew the fastest rate we've ever grown in our history last week, and we still spent basically nothing on acquisition marketing. We spent a bit on brand and community and events and whatever, but on pure acquisition marketing, we spent basically nothing. We added 21,000 accounts last week, which is, if you add that up over a year, is more than any other bank in the UK. So I think we're only getting started, and it's accelerating. Taking a step back, I'd look at the challenger banking market in the UK, a sort of 16 or so newly authorised banks, but I'd really clearly split them into two camps. The majority, probably 12 or 13 of those banks, Oak North, Paragon, Masthaven, even Atom Bank now, are savings and loans companies, which are great, offer the customer brilliant, much broader choice, higher customer service, better price competition. They're really good, but in our world, they're spokes around the hub. They're single-use products that focused on a particular use case. I think they're very, very valuable. But then there are the hubs, which are the much more transactional accounts than balance sheet lenders. I think I'd put ourselves squarely in that category, probably N26 in Germany. And then you add the spokes, whether that's an open marketplace of spokes or carefully curated partners to offer a kind of full service. Probably Starling in their current account are also following that hub and spoke model. But there are 2 or 3 or 4 of us in the kind of hub model, and probably 12 or 13 or 14, mostly with different kinds of investors as well, more in the balance sheet lending camp. And I think the two work in parallel really, really nicely. We don't want to offer an interest-bearing savings account or mortgages on our balance sheet, but we realise a lot of our customers will want those products over time, and so we'll plug them in from third parties. That's really how I see it in the UK. As I said, N26 in Germany, I think, are doing a great job. If you look over to the States, it's really interesting because they basically haven't authorised any new banks for 10 years. So you had Simple, sort of skin on BBVA, and now you've got Chime, also skin on Bancor, excuse me, and Chime now on the West Coast, also basically a skin on top of Bancor. Seems to be doing really, really well as well. And Barrow Money, I think, just got authorised provisionally by the OCC for a national banking charter in the US, although there's some confusion about whether they had the FDIC insurance or not. So still some regulatory road bumps potentially in the US, and I think that is the main thing that's slowing it down over there. And the interesting thing is, from my perspective, 2 or 3 years ago, venture capital investors in particular sort of looked at the market and went, we're not a bit worried about capital requirements, a bit worried about regulation. How many people are going to adopt it? I think that thinking has changed. In Europe, I think there is no more debate. And I think in the US, they're finally all waking up to this is going to be a massive, massive market. And I think 2019 in the US will be the year of the challenger banks, or whatever you call that. I think the move into debit cards, prepaid cards, checking accounts, a range of providers like Square Cash, like SoFi perhaps, Varro Money, Affirm, PayPal with Venmo, I think. So yeah, I think it's really holding up in the US.
How far along do you kind of just gut feel? How far along is the Monzo proposition, like in terms of development? If you've got your roadmap like in your mind of what Monzo looks like in 10 years in terms of what customers do with Monzo, how far along are you?
About 5 or 6% done, which is really interesting. I think we've just about got our current account to a place where it's better than almost any other current account in the world. And it wasn't better for a while. There were missing features, and there still are missing features. We'll launch cash deposits in the next few weeks. We'll launch a high-interest savings account with a third-party partner in the next few weeks. Inbound international transfers are a bit hit and miss still. So those are the three things that we still need to do. And once they're in place, it's sort of like, okay, that feels like the base case. That's sort of, we are now competing on an even keel with all the other current accounts out there, and I think we'd win more than we'd lose in those battles. But that is just the foundation layer. We now need to build all of the exciting stuff that is truly differentiated and truly challenges the incumbent way of banking. And that, for me, is the most exciting thing. There's this Canadian ice hockey player, I think it was Wayne Gretzky, and a journalist asked him, why are you so good? How do you manage to beat all the other ice hockey players? They try pretty hard, they skate pretty fast. How do you always seem to beat them to the punch or whatever? He said, well, all the other players, they skate at the puck. They see the puck, they skate at the puck. I skate where the puck is going. And I think I think that might be happening in challenger banking, where got RBS have announced their new app, Barclays have a thing, HSBC launched an aggregator, and they're all sort of looking at what the current state of challenger banking is and say, we've just got to match that, right? They're skating where the puck is at. And so you see, was it Lloyds or Nationwide, who you can now freeze and unfreeze your card, you can disable it for ATMs, all this stuff, right? Like, pretty neat, but ultimately not industry changing. The thing I think is industry changing is this move to the hub and spoke model, the marketplace, the platform, whatever you want to call it, the move to the smart bank from the dumb analog bank, where the current account isn't just a place you keep your money, but a powerful financial control center that solves all the problems around your money. Mm-hmm. And I don't think the big banks can follow there. I think there's this classic innovator's dilemma problem where they rely on cross-sale of their own products to bolster their profits. And in contrast, if your business model is going to get people the best products from across the market, even when they undercut your own product set, I think you're in a pretty conflicted position. I think that will be interesting to see if any bank dares to follow there and risk undercutting their existing business.
Yeah. So Monzo, in a certain sense, potentially becomes an interface, kind of financial dashboard. What people open up when they grab their phone in the morning and they kind of go about their daily life via Monzo.
Yep. Even today, the average Monzo customer opens the Monzo app 15 times a week, twice a day. I think that it's not an objective hours. We don't value eyeballs, but I think it's an indication of the depth of engagement we have, and I think that will only increase over time as we're able to solve more problems. You can think of examples now, like my fridge just broke. It's still in warranty, but I don't know where the warranty is. I bought it with my Monzo card. That warranty should be within Monzo. Or I bought travel insurance through Monzo. To make a claim, or if I've got a query about the insurance product, I should be able to tap into the insurance product from within Monzo. I'm already authenticated as a customer and talk directly with that insurance provider. We can act as that centralizing hub for a lot of these products that aren't very high frequency, very high touch. Normally, an insurance provider might talk with once a year, and so I don't think it makes sense for an insurance provider to always have the app relationship unless it's a day-to-day, hour-to-hour interface. So Monzo can be that interface and then allow all of these other service providers to have a fully authenticated conversation and support with the customer in a single place.
What are those conversations like when you're talking to the incumbent insurance provider and saying, hey, outsource your claims initiation to us and integrate technically so we can do it?
It depends. So as you would imagine, probably the newer, more tech-enabled challenger brands are much, much, much keener on that conversation than the older legacy providers, because they have this, as legacy banking providers have, the legacy insurance, legacy utility providers all have their own technology problems. So I think you're much more likely to see an integration with Bulb or Octopus Energy or OVO Energy than you are with npower or British Gas, for example. That's not to say they won't get there, but actually I think in principle, they're pretty keen. I think that it allows them to deliver a better grade of customer service at lower cost. So really everyone benefits.
What new challenges have come with running a growth stage business than maybe some of the challenges that you were facing earlier? Where
do I start? My role changes about every 6 or 9 months. and not like to a dramatically different role. I feel like I'm doing a different job. So it's about scaling the organization more than anything now. I think our product is working pretty well. I'd like to get it working better, but the most directly impactful thing I can do is scale the organization that builds the product, not get involved in the product kind of hands on myself anymore. And for me, that's hiring other executives. So we've hired 3 new kind of senior C-level executives in the last month or 2. But then even working with them to convince them what they need to do is hire a bunch of really, really talented lieutenants and delegate, and then delegate, and then delegate. We're trying to build an environment here where the people who are closest to the customer and closest to the problem get as much contact as possible and make the best decision. So really empowering teams to be autonomous and to drive at goals and act in the best interest of customers. And I don't actually think many other companies do that. And I don't know, I haven't worked in many other companies, so I don't know what normal looks like, but the reaction we've had from quite senior people who come in, it's like, whoa. Like, you talk about this stuff, but we've never actually seen it happen in practice before, and it's kind of disconcerting. As a senior executive, we're not actually calling on them to... We're trying to hire servant leaders who lead from the back and enable and empower their teams to make the best decisions, not come in and say, everyone follow me. Which is really, I think, a mindset shift. So yeah, it's certainly for me about scaling the organization, hiring people who've gone through that scale journey before, and then convincing them to hire their own team and sort of push out responsibility.
How do you upskill when your role is changing?
I read a lot of books and blogs. I try and talk with people who've done it before. I find the best advice comes from founders who are a year or 2 or 3 ahead. So Stripe invested, and I'm talking with John and Patrick and Will Gabrick, the CFO. It feels like they're 1, 2, 3 years ahead of us, and so they've just kind of lived all of this stuff, and so it's super, super relevant. We've recently hired an executive coach, so we're working with that coach to kind of shape the executive team. And we're also looking for a new chair who I'm really looking for a mentor and a coach for me personally. Ideally, again, someone who's been through that hyper growth, 1 million to 10 million to 100 million customers kind of journey. And there just aren't many of those stories in financial services. So it's proving a tricky search.
Interesting. You wrote an article, a blog article, not too long ago on, I think it was called Unit Economics.
Yes.
And it was about the VC growth model and the types of businesses that it works for. Is the concept of, basically raising a lot of money from venture capitalists to acquire customers and then kind of deliver revenue as a fast follow. It's kind of first grow the user base and then kind of pivot to revenue. And I think one of the business models that you mentioned was particularly well suited for that model was a marketplace model, which is of course core to what you guys are doing. Be interested to know just how that sort of thinking, kind of the topic and the conclusions of that article have informed your plans with Monzo. And I don't know, how do you think about it extended to the broader challenger banking space?
I think it's something we think about a lot, and I think if you're not clear what model you're following, you can get in big trouble. So I'll contrast it with my previous co-founder, Matt Robinson, who's now running Nested. Nested is a business that effectively helps you sell your home by making you an upfront loan on your old home so you can use the cash to be a cash buyer on a new home. There are a few things about that. One is like it's very transactional. So you get one shot to make money from the customer, and they're probably not going to be buying another home next week or the week after. You might see them again in 5 or 10 years. So you kind of have one shot. The second is that the business might get a bit more efficient at scale, and certainly you'll have better data to underwrite your loans better. But if you can't kind of generate gross revenue from your first few loans, it's unlikely you'll be able to generate gross revenue from your 1,000th or millionth loan. So you kind of you've got one shot per customer, you've got to make money on a feature and then just scale that. There are other businesses where at scale your economics do dramatically change. Like Facebook is a really, really good example. The first 1 million users they made no revenue off, and even the first 100 million they made no revenue off. But at scale, the economics flip. And somehow this happens in different ways, and it might be like supplier power or kind of negotiating power versus suppliers. As you grow, all your suppliers come back and they halve or quarter your costs even, and suddenly, even if you don't grow revenue per customer, the cost per revenue declines by 75%. So you've got to believe, if you're kind of following this negative gross margin play, you've got to believe your business model dramatically transforms at scale. And I think a multi-sided marketplace absolutely is one of those things where you can imagine a marketplace in a town where you've got a bunch of vendors and no customers, not going to make any money, no one's going to turn up. Or vice versa, you've got all the customers, they're not going to show up unless there's something to buy. So you've got to crack that chicken and egg. And one way of doing it is offering cash incentives to one side to show up, to then bring the other side to kind of form this marketplace. I think Uber in particular used very, very cheap, plentiful capital as a weapon to develop these quite complicated kind of ecosystems in each city. They could tell once they got them up to speed, I guess, they became very, very profitable. But bootstrapping that without a huge investment of capital would be very slow. So they just raised literally billions and plowed billions in. Now markets like New York and London are vastly profitable for Uber. So I think it's super, super interesting.
It's fascinating just conceptually to kind of think about and observe and see in practice at various companies, and very good.
And with Monzo, so already the costs have come down. Just the servicing costs have come from 65 to whatever it is, most recently 5 or 10, depending on how you measure. So we have achieved economies of scale on the cost side already. We are not. I believe there's very, very strong network effect that will pay off over time, but actually we're not relying on those to get to profitability. I think the balance sheet lending will get us to profitability. That's a kind of tried and tested method. I really, really believe the network effect will pay off, but it might be at 10 or 20 or 50 or 100 million customers. And so we're not relying on that to get to break even, but we are probably relying on it for the sort of 10 or 15 year vision.
Yeah, excellent. So in terms of encouraging potential customers to open new accounts, where can people find more about Monzo and sign up for a current account?
So we're smartphone only, so the iOS App Store or the Google Play Store. We're on Twitter at Monzo, or our website is monzo.com. Come and check us out.
Excellent. Tom Blomfield, thank you very much for joining us today.
Thank you, Will.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.